Good day, ladies and gentlemen. Today I'm going to take you through an intensive breakdown on how we manage to cash trades with our modified SMC strategy. Stick with me till the end of this video and you are going to learn the best SMC strategy ever recorded. Now let's go into business. When you approach your trading view, you open your trading view, the first thing you look out for is the direction of the trend. Having said that, let me give you a breakdown on how this video is going to go. This video, it is going to go in 3 steps. First will be directional bias. Second will be point of interest. Thirdly, I will take you on lower time frame confirmation, which is the most important aspect of this video. Let's dive into it. When you open your trading view, the first thing you want to look out for is the direction of the market. Is the market moving upward or downward? That is the first thing. Then, having said that, we can clearly see that the current state of this market now, I'm using line to explain. Later on, I take you back to the chart to exhibit what I have just explained to you here. The first thing to look out for is the direction of the trend. What we are seeing here typically is a downtrend. How do we know it's a downtrend? When you approach your chart, the first thing you look out for is the first break of structure. Is the break of structure to the downside or to the upside? We can clearly see here that this break of structure is moving towards the downside of the market. So that alone tells us that this is a downtrend. Now, we can see that the market gave us a lower low, a lower high, which is here, another lower low again, making this place a break of structure. What are we expecting immediately after this? We are expecting retracement to the upside. While this retracement is going on, we don't expect that this retracement go to the highest point of the trend. What is the highest point of this trend here? This is the highest point. Let's call it our swing high. We don't expect that the market goes up to this place if it is really a downtrend. Expect that the market stops somewhere here and then give us lower prices. We are very much interested in things that happen inside of this place. With a clear point of interest and lower time frame confirmation, you can take your trades from here and sell to the downside. But having said that, let's move to the next level. Immediately after we get a lower high and a lower high put up another lower low, we kindly note that this has lost its validation as our swing high. This will be our new swing high. Why? Because we have another break of structure and we have another lower low. Think that the market will give us a pullback, and this pullback should not come to this place here. It should end somewhere around here and they will give us another lower low, right? And this is what happened. We have this new high should give us a pullback. This time around, the pullback did not just reverse back, but the pullback continued to break our swing high. Now, immediately this pullback break the swing high. This is a different thing entirely. This swing high becomes our what? Change of character. What is a change of character? A change of character is a current market trend that indicates that the market have shifted its character from going downward to going upward, from going bearish to going bullish. That is a change of character. Immediately after the change of character, what are we going to do? We can spot out our swing low. Immediately after the swing low, what are we looking for? We are looking for a scenario where the market will come to this place, obey these lows, and then give us what? Higher prices. As simple as that. So eventually, the market comes here, give us a pullback as promised, then give us higher prices. It indicates that this market is truly in an uptrend. So we are looking forward to look for buys. Meanwhile, this is happening in the 4 hours time frame. Now, if this is happening in the 4 hours time frame, where we are very much interested in is in the 15-minute time frame, so that we can be catching some trades in the 15-minute time frame. This strategy works in the 15-minute time frame. We use the 4 hours time frame to understand the direction of the overall market. All right. So having said this, you kindly put out your break of structure. The first direction of the market is a change of character. Then from there, you start having series of what? Break of structure. You should know that too. Because so many people mistake this break of structure and change of character. So we now can clearly see that the market has changed to what? A bullish trend. After that, we bring our swing low, update our swing low. Why are we updating our swing low? Because we have a new high that has broken this structure, right? Good. Now, this is simple market structure. I'm going to take you to a more interesting and complex market. Let's take the black line to be a 4 hours time frame line. Let's take the red line to be a 15-minute time frame line. When the 4 hours time frame is giving us higher prices, this is a higher high, lower high, and a higher high. What the 15-minute time frame is doing is that it gives us higher high, lower high, higher high, lower high, higher high, as the case is already. Now, what I want you to understand about this explanation is that 15-minute time frame is giving us a detailed information about what the 4 hours time frame is about to do. So if the 4-hour time frame is about to make any move, the 15-minute time frame will give us a hint before it happens. That is one thing you have to understand. So immediately you notice that the 4 hours time frame is about to come and give us a pullback. The 15-minute time frame will give us a change of character. This is where we come in. This is where we are very much interested in. This becomes our change of character. After the change of character, what do? We spot out the areas we want to take a sell from, right? The area we want to take a sell from. When we come to this place, when the market comes to this place, we look for lower time frame confirmation that will help us take this trade to the downside, right? As simple as that. After that, we see that when the market was done with the pullback here, it gave us another change of character here, indicating that the pullback phase is done. The market wants to give us an expansion. What do? We stretch, mark out our entry models, and take a trade. Simple. Let's now take all we have learned from this place back to the main chart to practice it. What you are seeing here is the market. Now, if you are not careful about how you read this market, you are going to get everything wrong. Now, let's spot it out clearly. This is our break of structure over here. Let's start from a much interesting zone. This is our break of structure. After the break of structure, what do we mark out? Our swing high. This is 4 hours time frame market structure, the one I explained first. Our swing high. The next one is what? The next one is our swing low. This is confusing, but let me explain. This is not a break of structure. This is sweep of liquidity. A break of structure must cover a candle. If it was here, we would say this is a break of structure because what? The market breaks with a body of the candle, not a wick. If you see a weak reaction, is a sweep of liquidity. It is not break of structure. Get that? What do we see here? Our swing high, our swing low, indicating that this break of structure alone indicating that the market was in a downtrend. But when you come to this place, you will discover that the market actually, what we were expecting was that when the market comes to this place, it gives us a lower low. But what we saw here is different. Market came here, give us some reactions, then what? Broke to the upside. Swing high becomes our change of character. We are going to state that very clear so that we won't make mistakes. The swing high became our change of character, indicating that the market has changed from a downtrend to a what? Uptrend. So what we are looking out for now is that when the market comes back from this place into this place, it will give us some reactions and then give us what? A pullback. Why this remains our single? This is what I told you guys earlier. This is not the lowest point of this trend. If our break of structure was here, then this would have been the lowest point. But now this is the lowest point of this trading range. This is the lowest point of this trading range. So now we are going to step to the 15-minute time frame and then see how things work. What we see here, we see that if you go to the 4 hours time frame, you will discover that this place here, this is just a one-time reaction. Then boom, you are going down. But here in the 15-minute time frame, see how detailed it is. The market gave us the last break of structure. After the last break of structure, the market gave us a change of character. This here indicates a change of character. After the change of character, what do we see next? We start seeing series upward. Let me mark it from here. See, I told you this will happen in the 15-minute time frame. We start seeing series upward, lower low, lower high, and going deep. We see that the market is giving us what? Lower prices, lower low, lower high, lower low, lower high, and so forth and so on. These lower low are not just lower low. In a more clear terms, this is a break of structure. This is a break of structure, another break of structure. So where do we, after making all these clarifications, where are we looking forward to take a trade? Right now, I'm going to show you a trade that we took recently and explain it how it works. Now, this is where things get very interesting. From the 4 hours time frame, if you see this internal structure, you are going to see that we have a break of structure here, we have a high, and we have a lower low. We are very much interested in taking trades from this level. Let me remove this so that you understand. We're interested in taking trades from this level. First of all, we mark out our swing high. This is the highest point of this swing. Where is the lowest point? This is the lowest point. Where are we looking out to take trades from? In this zone here, this is where we are looking at to take trades from. Whatever happens in this place is where we are looking at to take trades from. But then, this is telling us, in the 4 hours time frame, we have passed the discount level. We are going deep into the 4 hours time frame uh, point of interest here. We are expecting that when the market comes to this place, to buy. But then the market is not yet here. But then this has actually meet our fib tool rule that when the market gets to 50% of a particular trading range, we should start looking for buys or sell depending on the trading range. Now, this market has met our 50% criteria. Taking sales around this place is very, very risky. Taking sales in this 50% is very, very risky. We are expecting that the market should give us a change of character from the lower time frame so that we can buy, right? But then when the market gets here, if we see good confluences and good confirmatory entries, we are still going to enter the market because there is no guarantee that the market is going to continue. If the market continues, fine, we'll start looking for buy. If it doesn't continue, we continue looking for sales. Simple as that. Let's remove the Fibonacci tool. Now we have marked our swing high, a break of structure, and we have gotten a swing low. In this trend, where are we looking at to take trades from in this area now? First of all, we spot out our order block, met our criteria. 1, fair value gap. This is a fair value gap. 2, a clear order block. This is a clear order block. 3, liquidity. There is no liquidity. If the market wants to take liquidity, this order block will be used as liquidity. But if it doesn't want to take, we'll still trade. So what are we going to do? We are going to play price and see how things play out. We have a clear break-up structure. We have a clear change of character. We have a clear change of character. After marking out your break-up structure and your change of character, the next thing is to mark out your swing high. After marking out your swing high, what did you do next? You can see that before we carry out any activities, we allow the market to get to our point of interest. This is our point of interest, right? Now, after that, we remove the 15-minute time frame point of interest. Of course, this is still the 15-minute time frame that happened to play out very sweet. After this now, what are we looking for? An order block. We secure our order block here. We have a very good order block. Regardless, it met 2 criteria. It met a fair value gap and a clear order block. But as it stands now, this candle is what we are hoping on to be our liquidity. What do we want to do? What do we want to see in the 1-minute time frame? That this current trend should move like this in a 1-minute time frame. Then when it gets to this place, it gives us a change of character so that we can be able to take our trade. Gives us a series of break of structure, break of structure, BOS, BOS, and give us a change of character. This change of character is what validates that our 15-minute time frame point of interest is valid. Once we see this, we mark out our swing high, the external point of the high. It's just the same thing we are doing in 4 hours. It's the same thing we are doing in 15-minute time frame. It's the same thing we are doing in the 1-minute time frame. This is not a complicated strategy built out of careful study. After this, we look out to take our trade from here, then sell at the 15-minute time frame zone, or we sell at the external point. So this is what we are looking at. This is what we are looking out for. To take our trade here, then our stop loss above the highs. Exactly. Now let's play it here and see how it works. Let's step down to the 1-minute time frame. Let's play price and see how it works. From the 15-minute time frame, we can clearly see that the market has tapped into our point of interest. So this is the point we are interested in. We step down to the 1-minute time frame to see how everything is going. When you get to the 1-minute time frame, you quickly spot out things you need to see. You quickly spot out, when you get to the 1-minute time frame, you quickly spot out your break of structure. Spot out your swing low. Swing low. You wait and see the reaction of the market. The market is going to come to this, it's going to change character. We will see if it is going to give us higher highs, we are going to see. So our own is just to wait and see what the market is going to do. This here is not a break of structure. Why? Because for a break of structure to be valid, this is not a break of structure. For it to be valid, there has to be a break to the upside like this. So this here did not reach this level. So this level still maintain our swing high. This level remains our swing high. So we keep playing price. This remains our swing high. All these are just sweep of liquidity. So there is no evidence that the market has not yet break to the upside. This is liquidity sweep. Keep playing price. The market did not still break any structure. So let's keep playing price. Okay. See what happened here. The market shifted from bullish toward bearish, so this becomes our change of character. After the change of character, we look forward to take trades. We look for our 1-minute time frame point of interest, the place we look out to take trades from. So the place we look out to take trade from the 1-minute time frame. This order block is the recent order block that has not been mitigated. This order block and this order block. These are the two order blocks that has not been mitigated. These are the two other blocks that have not been mitigated. This one and this one. For an order block to be valid, it must 1. Have a fair value gap. 2. Has a complete full candle to represent the order block. Then 3. Has liquidity to come and take. This other block does not have liquidity to come and take. This one has liquidity. Why? Because the market can easily use this zone as liquidity. to favor this zone, right? So market should come here and go back. It means that we are going to miss the trade, or if we have more money to risk, we are going to take both trades. See it? I'm not just going to cover this one, but we'll cover the highest point of this trading range. What is the highest point? See this line here. This is our swing high. So this swing high here is the highest point of the trading range. So we are going to cover it for a while. Then what is our target? Let's go to the 15-minute time frame and check the target we have for this trade. If this trade plays out very clear, this is going to be our target here. Why? Because already if you check the 4 hours time frame, we would have focused in the lowest point of this trade, giving us 35 risk to reward ratio, which is good. But then we are in a 50% of a Fibonacci tool. Alright, in this 50% now we are expecting higher prices. The market might come down to a while and start giving us higher prices. So because of that, we are not going to target much for this trade. We'll just target the 15-minute time frame zone. Then after that, we'll take our profit and wait for the next reaction of the market. Because of that FIB rule, we are not going to target much for this trade because the market has already gotten to 50% of the 4 hours time frame. So our target is going to be here. Our target is going to be at these lows. The market should come here and then give us a break of structure. We'll be waiting to catch another sell from somewhere around this place down. But then let's be realistic. This trade is more realistic than any other target we are going to have for the trade. So let's play price. After getting our target and after explaining to you why we are targeting the 15-minute time frame zone, we are going to play price and see how everything plays out and see if it tags us inside or not. Oh, this is what I say. You see, the market actually used this zone as liquidity. Then it almost took us out, but we kept a reasonable stop loss. We covered the high, the swing high. We covered it very well. Let's play and see how it goes. The market started delivering. This is actually a 9 risk to reward ratio trade, which is very, very reasonable and it's worth it. So we are going to fasten the whole thing. You see. Okay, this is it, guys. Immediately the market gets to somewhere around here, we kindly break even. Break even means we bring our stop loss to our end so that in case the market gets to somewhere around here and then decide to go against us, we will not run at loss. It will just be we will not be running at any loss because the trade is already risk free, so we wouldn't be at any loss. As simple as that. If this video is self-explanatory enough, I want you to drop your comment, share it to your friends who are actually learning how to master the chart and market structure, and also share it to people who are trading SMC strategy, right? So they can learn the modified SMC strategy and start making money from the forex market. If you want to trade with us, we are always open. If you want to share contact with us, we are always active. So GG's, guys. See you in the next video.